Hello, everyone. Welcome to Invest. We're talking about investing, finance, and professional for today's systems only. The investment going to talk today would be Avax and Matic. So, respect to the two highly requested crypto, I decided to spend some time today. I spent about 2 hours just studying up on this crypto assets, did a little bit of historical research on the resistance levels, on the technical front, and also looking into the risk management levels as well. So it took me some time to formalize what's the right level of frames that for me, again, right, investing is more of an art than science, right? And based on my conservatism, these are the levels that I identify for us to be you're using as a reference, right? Again, this is what I'm doing. I personally don't or have investments in Matic or AVAX at the moment. But because you guys are asking for it, I want to be, responsive and also provide you guys with the right guidance. So, you guys don't make the, nonsensical or not logical decisions, right? So, with respect to the first one, let's go dive into Matic first. You could just see that historically, we've been, just looking into the frames, right? You can see that ever since it began, it's sold off, basically more the buy the rumor, sell the affectation as it begin on a trading platform as we hit to the bottom of 62 cents. And when you got there, you could see clearly how overly depleted we were at the 26, right? So when we hear anything like below 30, 35 is already a relatively depleted zone. 30 and 26 is even more severely oversold, right? And at that level, you could see that immediately some of the smart money have bought in, right? And you could see how we gradually went up and then subsequently consolidated at the level of, firstly, right, you could see some consolidation around the $1, right, before the leap up to the next logical level will be the flat number 120, right? And you can see 120 was another leap up to either frame of 120 to 130, right? And you can see that we kind of hover a little bit, consolidated a little bit because of 130 is a flat number again. And then we consolidate ever since, right? So it's been just struggling above, right? And you can see clearly, just to read this on a high level perspective, this is a head and shoulder, a very prominent one, right? You could see the head, the shoulders, right? And when you see that pattern, you sell off from there, right? So this was not even, a cup and handle at all, right? You could see we could never even get there because of the lack of pressure that we were trying to form. We could see that we were trying to form a cup, right? But the cup never got all the way to the top to the all-time high. And when you get there, you basically disincentivize investors and lose patience and subsequently sell back down, right? And then the next logical level was to sell back down to $1, right? And as we got to $1, which is a relatively, consolidated slash flat number, and then ever since then we're just kind of struggling. And then ever since then, we are seeing a little bit of reversal of a momentum, and I think this is mainly driven by the altcoin reversal and Bitcoin obviously dragging up the whole market to go up from there. And then you see this one mega green candle, obviously by a whale based on just the volume, and then incur more of a euphoric pump, right? You could see how much overbought we were at the 81 out of 70 when we were hitting the $2.22. And then now we're just sliding back off, right? Because we're overbought, and what logically makes sense for people to do is to sell when it's on the super high peak, on the hype, on euphoric train, right? So then sell back down to the next core resistance of 140. So right now the question is should we be buying right now, right? And this is the question that you guys are asking me, right? What's the frame of reference that we should be thinking about? And based on what we talk about, based on historical consolidation zones, these are levels I've identified so far. I think the hard answer, or the quick answer, is no, you should not be buying right now because we're running all-time high, right? And the reason we're surging right now is because we were forming a downward wedge, right? We're forming like a downward triangle, and then that will percolate a squeeze as we got to a more depleted level. And also at the same time, we form a golden cross at the time. So the perfect level that you would technically incur risk would be somewhere around the 143. This is the reason why I put this level here, right? So to dollar cost average, right? What's the fair level? 175, 143. And if we even get to the next level 120, which is you basically fixing the gap, that will be technically a steal level, right? So that's the first one on Matic. Hopefully that makes sense. I'm just painting the historical consolidation zone of how I arrive where I'm at right now. So with respect to Matic, it's a little bit more, more of a, I would say sleeping giants, if you may. It started from 36.20 and then subsequently went up to the next level of 50, which is a flat number. And then you can see the next consolidation is the 60 or 59.69. And then the next level is 80, right? You could see clearly how we have pauses in between the intervals of like 10s and 20s, right? And then ever since then, we're just kind of ping-ponging up and down, up and down, up and down. And as we got to more of a depleted level on October, you just start percolating, and you could see some sort of upward ascending triangle, which is quite interesting. And I would say this is mainly driven by retail investors, and I would say this is mainly coming from just more media affectation talk about AVAX. And with all of that euphoria, it subsequently drive up all the way to the 1.14675 at the all-time high, right? So with respect to what's the current level at the moment right now, we are at, when we were all-time high at 146, we were at the RSI scale of 80 out of 70, so you know what that means. Right now, we're in a very bearish state, right? We are at the 50 out of 70, so it's an okay level, right? But ideally, as we deplete down further to like below 35 or 30, I think ideally 81, which is, if you look at historical trends, that's the next consolidation level. But in a more substantive level, I would ideally dollar cost, like for me personally, 60 to 50 is still a better dip for us to incur risk from here, right? So with respect to risk management level, you can see that I've added 2 additional ones. AVAX, these are levels for you to reference from. Polygon, these are levels for you to reference from. It's basically comping, or comparable comping, that's not a word, to the ones that we identified so far, right? So hopefully this is helpful for you to triangulate the risk management level. I would say respectively, both of them are relatively screaming a premium at the moment. Obviously, with respect to Polygon's a little bit more severe in comparison to AVAX. AVAX is actually not a terrible level for you to incur risk, but I think we have some more room to fall down to, knowing the fact that this seems like more of a downward wedge. No, not downward wedge. A head and shoulder. Apologies. Right, we have not formed the secondary shoulder yet, but it seems like this could be a little mini shoulder, and then the head, and then the shoulder. So still in the bearish sign. So overall, both of them are still bearish, despite obviously Polygon or Matic is still surging right now. So hopefully this is helpful. Really appreciate you for dropping, and let me know if you have any questions. This is a highly requested one, so that's why I want to get back to you guys. Really appreciate you. Take care. Bye.